Okay, good morning, traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, August 20th, and Mike Boutros on the horn with you. Great to be with you guys this morning. Eman, good morning. Jay, Mark, Peter, Pooja, got the whole crew today. I'm doing well, Eman. Thanks for asking. We're seeing some interesting price action. And tell you right off the bat, I like sterling on this move. Euro's kind of provocative here. I like Jamie's trade and where we're looking at it, but it's kind of stalling. We need it to move somewhat close by. Dollar CAD, interesting at the highs. Didn't have the guts to push the short there, but I'm looking to see if that resistance holds. Man, it's a strong uptrend, so I've been really reluctant to touch that. On the menu for today, we're going to hit DXY, dollar CAD, dollar yen, sterling, Kiwi, gold. I have dollar Swiss on the list, although I haven't touched that one. And SPX for you, P. That resistance level we talked about in the webinar, right? It's just right on point. So that 30 region is what we're looking for resistance there if it breaks. Okay, any other questions or trade setups, guys? As always, feel free to throw them on the message board. Here's where we start things off. I usually jump into the DXY, as you guys know, but I kind of want to just really quickly breeze over this time because the only thing that matters is 98.40 level. I'm assuming I see all these names in the morning webinar and daily effects on Monday. So we did go over this yesterday, but just a quick reminder, again, it's the basic high day close that we made on August 1st, okay? 98.40, slope resistance for that same move right there. And we're basically looking for reaction, okay? 98.42 is actually the 100% extension of the advance off the low right here, just off this near-term low that we made in June, 1, 2, 3. So you have lateral levels on the weekly, you have slope on the daily, you have slope on the intraday, and you have that high day close, some ongoing divergence here on this move higher. It's like too clean, but resistance is resistance, right? The pivot break above this, just so you guys know, the monthly open comes in at 98.59 if we breach here. Again, not the favorite scenario, but that's what we need to have in mind. And then the 2016 open, which again, I don't really tend to stress too much being this many years out, but it's been a clear pivot in price. So it's kind of foolish not to look at it. And those would be your next topside targets if we breach. All things held constant, we've had a 5-day advance. Momentum is holding 60 on the daily. We're seeing divergence on the near term, and we're testing resistance. That said, it is uptrend resistance. So if the breach happens, you'd expect to see an accelerated move. And that's the implications of where we are in the dollar here. Questions on DXY? Okay, so let's jump right into the most previous setups that we've been looking at. So dollar CAD, here's what I'm looking at. I mean, we put this on daily effects as well yesterday. Just kind of wanted to throw it out there. I've shifted the focus on the slope. If you guys noticed on the intraday, and we're testing near-term resistance essentially, right? So as we were opening up the week, kind of that slope that we were looking at, we kind of scratched, talked about 33.38, which is the low close, or the high close rather, excuse me, that we made on this 2-hour chart. I believe it was the 4-hour chart as well. Basic trend support, again, really subtle slope. Don't really like these moves per se, but nonetheless, here we are. Really clean weekly opening range set right below last week's swing high, right below the median line, right below that slope. As I said in yesterday's piece, it's either 33, 39, 40 right here, or a rallying to 33.55. It's one of those two that I'm looking for. Now, as we stand right now heading into the US trade session, you do have a outside reversal candle here on the 2-hour. You also have the makings of what could be an outside reversal here on the 4-hour. Again, momentum on the 4-hour holding resistance. Sorry guys, one moment. Okay, so point being, if this is going to hold, this would be the spot. Remember that we were looking for 33.55. on the last stretch. And then here's what happened, right? It came right into that slope and failed, didn't quite get the extension. The high registered at 33.44, so about 10 pips away. So I don't know. I kind of think, we were laughing about this yesterday, calling this thing the new abomination. I kind of think um, that if we breach, or I kind of feel like it has to make one more tag of that before it turns around. Maybe this is some sort of consolidation fake out. It rips higher. Everyone gets, all the stops gets, all the shorts get stopped out. Long guys start jumping in because they're chasing. Then all of a sudden it whipsaws and comes back. If it's gonna really take the abomination throne, as it were, I think it's definitely heading lower after a false tag. That's just my opinion. As it stands, this 4-hour reversal, we'll see if it pans out into the U.S. Open. If we break back below 25% line, we're already going to be a ways off from resistance of where I'd feel comfortable putting a stop. So I'm going to kind of sit this one out. I haven't really gotten the conviction to jump in. Also, looking at this earlier today, here's the 30-minute look like. I was kind of hoping that we would see that like momentum start to hold on a 60 break. So we did pop 60. We're now testing 40. Again, you could see this thing kind of range, maybe whipsaw higher once more. But the ultimate idea is, again, we're at near term uptrend support. So like it's a bullish trade. It broke out of downtrend support, but the rally has just been phenomenal. And ever since that high registered on the 7th, we've kind of just been ranging. Okay. Hey, Mike, crude, please, if not on your list, tweeted you a chart. Not sure if you saw it. Pooja, I did. You know what? Shame on me. Here's crude. Yeah, it's on the list. I saw that chart, and you know what? That is a great slope. We're going to add it on the chart today. Where's my, oh, here it is. Yes, crude. Okay, we'll definitely take a look. Okay, questions on dollar CAD. So for dollar CAD, the only other thing you want to remember is that we do have on tap tomorrow, if I'm not mistaken, we do get the consumer price index from Canada, expecting a print of 2%, or the previous print was 2%. We're expecting 1.7, excuse me, for CPI in Canada. So that's tomorrow at 8:30. Other than that, everyone's looking at Jackson Hole. Always a weird. Dollar yen. So this one, here's what we're looking at with dollar yen. So last night, remember that slope we just tacked on last week? I was telling you guys, beware, don't know what the deal is with this thing. We haven't got too many inflections, and we got that median line resistance pullback. Support at the lower parallel has been ridiculous last week into the close. Here's where we opened up this week. Ultimately, it's either 106.78, 107.20 max that you'd want to start to fade and look for the break lower, but we are still, basically in the broader downtrend. Here's the daily chart on dollar yen, pretty clean. This is not the low day close, excuse me. But the low from June has been a decent resistance level. It converges on the median line, 106.78, just higher. You had that 50% retracement. That was 107.20. So both levels of which converged sort of on that median line. A sliding parallel, that slope in red, 1-2 touch, converged on that as well. Didn't get the tag last night. Here's what the intraday chart looks like. It tried to make a move on it. A high registered, the high before the report was 106.69. We tried it again, came at 106.69 again and turned lower. So what is this? Is this a break of the formation? With these slopes that, kind of are sketched out at first, here's an objective level to look for. So I'm not really convinced with this initial move. You'd want to see an accelerated move, some follow through on it, cascade effect. The weekly open support comes in at 106.24. Still going to respect that level. If we get below that, you're basically looking for another move on 105.78. Just to put things in perspective, another extension I was looking at last night was this, but we had no way of knowing this was going to be a high, right? Or that this was going to hold. If we break that low, if we break the opening range low, really confirms a break of that slope. One thing I always like to do when I'm trying to assess whether a slope is breaking, especially when you have stuff like this, where you made a break of the low, so you've already gotten, or the slope's been compromised at one point already, just put a parallel off that. Look what happens. Okay, converges right in the weekly open. So adding further conviction to sort of eyeing a level at which, okay, this is going to technically change my opinion on what's happening in the near term, right? The recovery off the low, which was the lower parallel of a beautiful formation. This was the recovery slope. If we break that lower parallel, that basic gradient, an objective weekly open, I think at that point you have to kind of allot the fact that we're going to pull back again, or we might even resume back towards that 25% line again. Not really crazy about it, but that's the implications. So for dollar yen, it's flirting with a break. I wouldn't want to say this is the weekly opening range because it was just Monday trade, but that point being where it is, I'd want to see acceleration there. The Friday lows come in just lower, just a good spot, sort of mark resumption. Dollar yen, very sensitive pair to watch, specifically on the back of Jackson Hole. It tends to be sensitive to interest rate expectations and the like. So we'll see if Powell can't roil markets with some sort of stupid comment. Questions on dollar yen? And a quick look at the dollar yen weekly chart. Here's that 107.76 level, which is get a 786 of the entire advance of last year's range, but it's also that swing low, which is the level that we were looking at. So really precarious here. Abomination coming into support early in US trade. That is 1, 2, 3, number 4 sterling. So pound, I like. It's now or never. Okay, if this doesn't hold, you look lower. Here's pound again on the weekly charts. Really objective stuff here, nothing too crazy. We dipped just below and closed early in August below that 25% line, but last week was like a perfect bounce off it. So just noting that momentum also bounced off that 30 level. You've got a trigger here if you want to look at it from the highs that may offer some tell, but from the weekly standpoint, it's a massive break of support. This is the first level which you could see a bounce. Now the post-Brexit low comes in at 1950. That would be the risk on any downside move beyond here. Here's sterling on the daily chart. Again, nothing really too crazy to get excited about, save the fact that it's basic channel support. Here's a basic slope off the high, extension there off the low that you made in May, caught the lows, a lowered floor perhaps, right? We opened the week at what? The monthly open. So we essentially opened the week flat for the month of August. Look for a break of this immediate range. The monthly opening range is really well intact. This thing is way stooped into the lows. You had again, I keep looking at this every day and thinking there's divergence there. It's subtle, really pitiful divergence, but price action with the lower low, non-confirmed in the oscillator, trigger pending, and everyone's bearish to the hill. I kind of think it's something worth looking at. Here's what it looks like on the intraday. Now, truth be told, I didn't really want to see weakness sub 12.75 or 120.75, excuse me, which was the 618 of the advance off the low, and a parallel here of the same slope that we've been following since last week. But look where the low did register, just pips away from the actual pitchfork support. So is this rebound going to materialize? You'd want to have a tight stop, if not break even, if we see anything northbound of 21, okay? And again, monthly open support, even if we're just going to kind of cover the weekly range, you're still looking at a rally towards 2150. So I think there's decent opportunity. It's at a decent pivot. You'll know if you're wrong pretty quick. If we get below that slope, this thing is, it's obviously a massive breakdown in price. We were talking yesterday in the webinar also about possible no confidence vote or confidence vote in general for Johnson, all this nonsense. We can follow the headlines all day and it's going to take us in a merry-go-round. Kind of need to focus on price. From a price standpoint, this would be an initial area to look for some sort of reaction, some sort of move higher. And if I can just bear with me one moment, I want to see what this looks like. Okay. Look for support. Pretty clean, right? Pretty clean. Near-term resistance, let's call it 2120. Okay, topside breach there. Look for the move back towards August open. A breach above last week's high would be what? It'd be essentially pretty darn close to a monthly opening range break. Keep that in mind that this thing is coiled up so well. This will tend to give us a decent monthly opening range. And it's late in the month, right? It's the 20th, so let's make a move here in sterling. Any questions on the pound? It's a high risk trade, guys, because we're trading with kind of dynamite here. So don't go, betting the farm on it. But especially because everyone's so turned off to it, I think it could be a nice sleeper sell here. Questions on sterling? Going once, going twice. That is number 4. Next up, Kiwi. Here's Kiwi, and I didn't have really much to say on this yesterday, except for the fact that it's just been hugging, just riding this slope for the last 2 weeks. Listen, when it was coming back down here at 64.20, well, here's the report. When it was coming back down here initially, here's sterling. So again, all we've done is drop through that support zone. Here's support, made a bounce off that parallel. Let's see if there's any follow through. Kiwi. Here's what it looked like last night, but just to recall where we were in this thing, here's last week's report, right? We were coming into that 2018 low, 64.24, converged on slope. We're testing downtrend support. Look for a reaction here, right? Well, we didn't get it, and it's just been sitting, but still respecting that slope this whole time. So what do you do here? Look for a break of the weekly opening range, which continues to set just above slope support. Those tend to be decent plays as well. We'll go over the DXY, and we kind of touched on it, but that level in the DXY, if it holds and you see some pullback, I think this would be a prime, for a little bit of a recovery trade. So it's one of those things where if this breaks as well, Kiwi on the weekly, just to put things in perspective, we just took out the 2018 swing low. We haven't closed a weekly close below it. Last week we closed at the 2018 lows. So it's do or die. It's do or die. We already had 4 weeks down. This would be the 5th. We had that outside, or a pretty big, wasn't outside, but a pretty big reversal candle off that confluence resistance. We talked about that. If there's going to be an exhaustion trade, this would sort of be the initial spot you'd start to look. That said, you haven't had any momentum even on the near term. Here's the 30-minute. It's been a really hard to get any type of excited about or find signals in. Just note that if we do see the break, it's probably going to be an accelerated move. And here's the 240s, what the bigger picture looks like. Really clean median line action, break, test as resistance before you move off, resistance, overshoot, support, support. What happens now? Two touch, two touch. Just puts things out in perspective for time, but it also puts the emphasis on a breach here. Again, the weekly opening range high comes in at 64.38. So I'm just putting that for reference there, but that's really what you want to see move. Another one. Don't particularly have the kahunas to jump in just yet on either side of this, but I think you get further clarity this week. Something's got to give here. Aussie's a similar situation. I don't know if anyone's trading Aussie. If we want to take a look at that, I actually haven't seen it this morning. Yeah, still holding that range from last week as well. Off slope support. Similar scenarios on both these. Dollar CAD, similar scenario, but on the upside. All right, gold. Here's number 6. Super clean. Love what it's doing on all counts. Even on this upswing, I think it's well warranted just because at the end of the day, it's, everyone and their mother seems to be bullish as well. I'm more of a contrarian when I'm intraday trading because here's what it looked like on the weekly chart. Talked about 1522, 1526, beautiful spot. Here's the daily chart. Noted that basic slope support channel was right there as well. Made an outside daily reversal off that level, looking lower. On the intraday, first thing, or what we noted last night, and even on the previous update, first thing you want to look for on the gold trade, here's the resistance level, was just a tag of sort of the median line to see where we go from here. This was the previous update from the 15th, last week. Here's what it looked like last night. There's the pullback. You took out, last week's open technically got taken out, but here's 1493. It's basically one of the swing lows that you made from last week. But more importantly, if this slope had any merit, that's the median line. That's the median line. So the basic resistance from here, if we're just opening the week, a lot of event risk on tap, would be 1512, 1509. This region here, 1512 being the objective weekly open, 1509 being that longer dated 1618 that caught resistance on the initial thrust higher. Also, sprinkle some sprinkles on top, rather, is you have that 75% line in that zone as well. Here's gold now. 2-hour chart. Rallied just pips from 1509. The high just registered just minutes ago, like 1508. Again, that 75% line right there. Weekly opens there. If it's going to hold, if gold is moving lower, this is what I want to see. Even if we pivot back above this, I'd really just focus on that 1522, 1527 level. Unless we get above that on a daily close basis, you're checking multi-year resistance. Huge pivot. And I'll just remind you guys again, the significance of that zone on the weekly chart for gold, right? Huge level right here. The late 2011 low, you registered earlier low on before you actually peaked, okay, after the record high, and then the actual concerted 2012 low, both came right here. So a massive pivot in price, multiple yearly lows, slope resistance on the broader term, on the near term, it's all loaded there. So that's the whole objective of us trying to play lower. Now, again, weekly momentum is still an overbought condition. But again, my opinion is that the stretch that you've seen already, what was that, like 20% off the yearly low or something more? Just about, warrants some back and forth here. So let's see if this holds. Downside break from here, as I noted, 1482, still going to be your focus. What's interesting is that exactly, like a couple hours after the high registered, you tried to push through that key zone and it failed. Look where it found support. Right at that same level. It's insane. And that level converges on the 25% line, basically into tomorrow's trade. So levels are clean on it, guys. Play them. Don't get too fancy on it. Don't start thinking, 1,600 just yet. Don't start thinking 1,450 just yet. The near-term structure, we're just looking for confirmation that there's a larger correction at hand. If it breaches, it's done. There's really nothing on tap until 1557, excuse me, soft target. And then 1585 is the key 618 from the record drop. So in the event of a breach, I'd expect it to be pretty accelerated. That said, coming off uptrend resistance here, might have some more kickback before we go. Could it be that gold did its test to the ML at 1492, then rip? Eman's asking. Okay, got it. We should wait to see if 1522, 1528 holds the move. In my opinion, yeah, amen. That's the way I'm looking at it. It could be. You're absolutely right. This could be the extent of the correction. You're coming off the median line, and if you breach, sayonara, keep on going, right? But you have to use this as sort of the guidance. So until this breaches, you still could be in a correctionary pattern. Now it's tough, and the one thing I will note is that how do I say this in a way that makes sense? A lot of people are using I got emails from clients, asking, well, how is it that you're bearish gold, but at the same time you kind of look for the pullback in dollar? Shouldn't they be inversely correlated? And all I would say to that is, you can look at those correlations over time, broader, longer term. On a day-to-day or intraday basis, you can't work like that, right? Here's gold from August 9th till today, or dollar from August 9th till today. It's been a straight rally, right? Here's gold from August, 9th from here till the 10th, that whole rally in the dollar. Did gold move down per se? So from a timing perspective, if you look at it from a day-to-day basis, just a side note, I don't want to get sidetracked here. Don't let that be the governing rule, factor of whether you're bullish or bearish. Focus on the price action. So yeah, to answer the question, is the dollar could pull back and gold could pull back as well. I see it the other way. I see it when I'm bullish gold and I'm in a long trade, dollar weakness helps, right? If I'm super bearish dollar and I'm trying to get long gold, or I am long gold, that weakness helps. But is that the reasoning behind the trade, or should that limit or govern um, my outlook? I would just take a word of caution with that. So look, at the end of the day, one other way to look at this, Eman, is you set a beautiful weekly opening range right above just a decent pivot in price. So look, the immediate focus on a break of this range right here. If it breaches, honestly, I have no business in this trade until I see what happens here. If it moves lower, I'm kind of banking that this gives us a little bit more of a corrective move. Ultimately, that pullback should offer better entries, if anything. This is sheer breakout, just coming off the highs. Questions on gold? Keep an eye on this one this week. Honestly, I don't want to talk up Jackson Hole too much because there have been years where Jackson Hole has been insanely volatile, and there have been years, probably last few, where there have been snooze fests. So that is the biggest event risk from like a headline type of deal, that and anything to do with China, I suppose. But just use some caution heading into it. Might be the catalyst we need. All right, gold number 6. 1482 is going to be the major level there for support. Dollar Swiss, number 7. So we covered this on the Sunday open, and here's what that looked like. So here's that slope that we were following in Swissy. Sort of the key level that we wanted to see hold was 97.12. That was a really nice confluence region, the 50% retracement, a 618 of the recent advance. Okay, you had slope support. This is kind of rejiggered here from the daily chart, but at the end of the day, that slope still remains pretty decent. Here's what it looks like. You got the tag of 98.16 on divergence, and this is why from here I'm like paused, right? If we pull back, we want to choke up the targets a little bit from Sunday. The Sunday open highlighted 97.52, 97.16, 97.12, right? You kind of want to kick that out. I want to put a little bit more emphasis now on that 38.2, generally speaking, which would be 97.52 again. Top side levels are unchanged. Here's the confluence regions. Doesn't come till later in this week, but you get the picture. Your objective weekly opening range low comes in right here. So just choke up those targets a little bit. And the reason, just a side note, we were talking about this earlier. The reason I'm still working with this slope is because although we didn't quite make it to that upper parallel, if you take just a parallel and extend it off these highs here, you see one touch, two touch, three touch. On divergence, yeah, might be a decent play. Actually, so I'll move these, that's a little cleaner. And you could probably drop this level at this point too. Kind of your major key levels here for near term for Swissy. If anything, 97.71, 97.52, look for a reaction there. Might be a decent recovery to actually play another bounce higher. But from this standpoint, unless we pivot back higher, and don't forget, 98.39, that's the objective yearly open. Same thing with 98.55, that's the objective 618 of the entire drop from that late July high. So I love this zone. Do we correct the lower parallel first before we make the test, or do we make the test then move off? I don't know. But from here, the technical picture looks a little bit precarious for at least a pullback. Questions on dollar Swiss. Number 7. All right, let's jump in some of the extraneous ones. We'll kick off with SPX for Pete. Then we'll jump into crude. Here's SPX. I was laughing when I woke up this morning and I found that, again, this is kind of still the resistance barrier. 29.30, we talked about that's the 618 of the drop from the highs of the year. It's the 2018 high day close. And that was sort of the breakout target if we broke 28.96. Here's what we've been looking at with SPX. So here's what it looked like on the Sunday update as we were opening. We were talking about this pivot. The fact that we broke above the upper parallel didn't quite clear that 618 though. So if we clear that, for me, that was the go ahead that, okay, we're still going to make that larger correction higher. Here's where we failed. Went through that May high day close like it was nothing. Butter right here, 29.30, 29.30. That's where we are right now. So yes, to answer your question, Peter, from earlier in the session, yeah, we've got a bit of resistance up here, but I also see it as sort of a confluence zone, basic slope, two touch, a little bit higher. You've had higher low, a couple of lower highs. I think you're in some sort of mean consolidation. And actually, again, just my humble opinion, ultimately, I think it breaks down first and then it resumes higher. I don't really not too much of a fan of terminal triangles, but hey, anything happens. So I'm looking at for possible weakness here, exhaustion. If it breaches, Pete, you're looking for 29.55, 29.60. It's the May high. This 100% extension, I don't want you to stress as much. Probably want to scratch that, to be honest with you. But this is a key pivot in price. Many highs, many lows, acceleration. That gives you 29.60, let's call it. But first, I mean, all things held constant, I am looking for, near-term pullback from here. What would be, so initial support, that is a good question. I'm still going to respect 28.96 just because it's the 618 of the range that's still intact. But get rid of this May high day close. I think a more objective high here catches this low, catches this low, catches this low, break acceleration, whip through, acceleration on both sides. That'd be the first initial area. So if you were like to break down here and this just rips off that, you're probably going to break out. Not my favorite, not my favorite scenario, but Pooja says 100% extension off the August lows could be if it breaks higher, yes. So that's what this is. This is the 100 if it's two equal legs, and I have that on there, Pooja, for that exact reason. If this whole recovery is sort of just a correction with a larger play to the downside still in hand, a breakout from here, yeah, would target 29.88. That might be the move the markets need to fake everyone out before we slam lower again. I'm not like a super bear, but with the tendencies that we've been seeing and all the broader moves, the event risk, or at least the headline risk, um, I'm not a heavy intraday trader of SPX, but man, these levels have been ridiculous lately. Super clean. So yeah, on the breach, I agree with you on that, Pooja. But from here, bottom line, you're testing near-term consolidation resistance, Fibonacci resistance. Again, that 2018 high day close, whatever you want to call it, it's a nice zone. And by that fact, I'm going to get rid of this pitchfork at this point. I just wanted to leave it on this so we can go through kind of the thought process of where we are now. We can drop that at this point, move that over. And work with that just consolidation region for a while. Okay, that is SPX. We are breezing through this today. Or am I just talking fast? It's one of those two. Okay, here's crude, WTI. Thanks, Mike. Great, says Peter. Hey, cheers, Pete. Yeah, the levels, I mean, they've been clean. This is a zone we've been watching, and here we are. Crude prices look like this. So not much to really talk about here on the weekly. This is kind of self-explanatory here. Crude for me has just been a near-term play. Let's look at the daily chart. So here's what we've been stoking on crude. As far as the daily chart's concerned, you're basically looking at a broader sort of correctionary channel off the high. This slope support, even support into the start of the month before it ripped below, tagged key 5103, 5167. You guys remember I've been talking about that for mad long. We got a really strong reaction off that, and this is where I kind of got thrown off. After it failed again at this channel, then it started to fail again at that slope. And ever since then, we've just been coiling up. Now, the near-term, and by the way, do you see how momentum is just completely flatlined at 50? So this is where things for me kind of got confusing. Here's the slope we were working with. A sliding parallel, I believe that's the 138.2, yep, of the formation. We kind of caught the high here. Was that the reversal? Was that the terminal? I don't know. Now, Pooja tweeted a chart out, and I think she's onto something with the larger slope. So I'm going to take this to 240. I'm going to scratch this for now, okay? And I'm going to show you this slope. Pooja, I do like that. The only issue for me is that for an intraday or even an intra-week type of trade setup, the targets are kind of far out. I think this is what you're looking at, right? And it would play really well with the fact that you caught resistance here perfectly last week. You basically just caught resistance there in overnight trade. And that low spike that we saw was basically a test of the median line. So with that regard, I do like it. Parallels of this haven't really gotten you much play. The 50 lines, kind of wishy-washy. So I'm willing to work with it. And just because Pooja, the levels play out better on the extremes. But from a near-term standpoint, I kind of want to see resumption here. And by resumption, I mean lower if this was going to continue to be a legit sort of break of that upslope. We will see. But at the end of the day, it puts further emphasis that if we do see the topside breach, we should see acceleration. And again, that 618, I didn't want to stress it too much because we've already sailed through it, right? We tested it here, pulled back. So I kind of left that as like, all right, if it gets through 56.92 again, then you'd start to look for this to be a breakout. And 100% of this move, if we take an extension, gives you targets well above 60 again. So it's one of those trades where It's do or die right here. Just like Sterling, it's do or die right here. Is this thing broken? Still holding that support, right? Doesn't look too convincing from this point, but these are the pivot zones that we're entering into. Anything northbound at 56.92, I think you're looking at sort of resumption, or not resumption, excuse me, breakout of this near-term channel. That being said, I favor the pullback. Questions on crude? Pooja says, thanks, those 5 waves had me concerned. Yeah, I've kind of thrown this back and forth with Jamie too. I think he's a little bit more constructive on this than I am, but it's a pivot. That's the way I play it, Pooja. It's simply a pivot zone to watch for. Um, I mean, even if you look at last week's trade setup, it was kind of one-sided. Then we just paired a huge portion of the weekly advance and just sat there. Momo is flattened out at 50 on the daily chart. We haven't seen really a crack above that with conviction. If we do top 56.92, I think you make it back near the yearly open, to be honest with you. But that's just my opinion. I don't have any positioning on crude, just a disclaimer. I would be interested if we had a clear signal on a washout lower to possibly get long. I loved where this bounced. Remember, this move was huge, right? This was the target for the move lower. And then once we closed that day well above the lows in such a manner, it was pretty constructive. The play was to the upper parallel. This fallback here in this move has got me a little bit confused on crude prices. I just think it could wash out lower and bounce and then rip. But from here, if it was going to kind of plow through this resistance level, I'd use 56.92 as the pivot. Does that make sense, Pooja? And that's what we're looking at here. It says yes, all right, with crude. Well, that's all on my list, guys. Let me know if you have any other questions or setups you want to review. It's kind of a wait and see. This is a time period for me. Well, I'm usually a nimble guy, in and out with a little bit more meticulous in these markets, just because we have a lot of event risk on tap. Markets are pressing some pretty big levels. The other thing just to keep an eye on, and I touched on this in yesterday's webinar briefly, but yields, which is just what everyone's talking about. You can turn on CNBC, Reuters, Bloomberg, and you can play a little game. Just put it on. Within 5 minutes, you'll hear someone say yields. Just because it's kind of the talk of the town, because of that brief moment last week where yields did get inverted. The sell-off is just so extravagant here. So extravagant. It's been one-sided. The recoveries have been pitiful. You've already seen us take out multi-year lows, So I am just more of a cautious player, and then you're heading into a moment where you're going to see Powell either confirm what the markets have been looking at, and if you look again at these interest rate expectations, is pretty clear. There's not really much of this consensus. A lot of people ran yesterday when you saw that tweet come out about the Fed having to cut 100 basis points rather close and possibly open QE. I mean, that's just ridiculous, right? So I'm the first guy to throw out those tweets and not really care. But when you look at something like that, that's not really something that the market is interpreting as sort of a legit concern. That said, that's why there's more important information or more important emphasis put on Jackson Hole this week. Because you got Trump pressure basically saying, the Fed's move too slow. They got to actually cut. They got to do more easing, which is like the easing part's the part that irked me. But and then you got central bank independence, and the Fed's going to want to assert itself, and Powell's going to say, we're not influenced by political opinion. We know we took that cut because of yada yada yada. the end of the day, 25 basis points does very real little juice for the economy. And if you look at expectations for December, right? This site can be pretty finicky sometimes. There's the expectations for December. You know, markets are starting to build on that expectation for possibly another 50 basis points. So 75. But if you look at the expectations for a point and a quarter to a point 50, that would be 100 for the year. So somewhere along the lines, there's going to be a little bit more of a calculation readjustment to interest rate expectations. If we start to build on the consensus of 100 basis points or 4 cuts, or whether they do it in 4 cuts and 3 cuts or whatever, a full percentage point off Fed funds, that would leave room. That would leave room for the dollar to pull back. That would leave room for gold to really break out and shine even further. Your typical expectations, right? That would leave room actually for markets to actually run further because they see that easy money coming. So I don't want to get into in the weeds for this, and my focus is going to be on price as always. Just wanted to point out that we are getting into pretty stretched levels here. Okay, well, if there are no other questions, we'll go ahead and wrap it up here. Don't forget Jamie's on tap next tomorrow, as far as I know for now, for the midweek strategy webinar, and I'll also be back on Thursday to close you out for the week, guys. Best of luck trading. Cheers.